Hello traders, this is Cousin Vinny coming to you from theclosingprint.com, January 10th, 2021. In this edition of your weekend video newsletter, we'll discuss the persistent strength in the markets, while growth stocks closed mixed last week with a couple of big winners in Tesla and Roku. The bond stock ratio is bullish, which is signaling equities are being favored over bonds, as we saw last week. Indicators are bullish. Commodities are bullish, with the exception of gold and silver, of course, which did break down last week. And heat maps are improving. We'll look at some IBD 50 names, some big cap 20 IBD stocks, some stocks that are showing rising profit estimates in green, and a blue dot scan, stocks showing relative strength in cyan. Dow Industrials have a nice group of stocks looking for a breakout, and we have some security-related names, advanced threat detection stocks like CrowdStrike and SailPoint, which look very strong going into this week. In addition, Bulkowski has 4 of 5 of his indicators green. His CPI signal, however, has turned red. It's bearish at 20%, with 4 bearish patterns, 1 bullish pattern, and 70 patterns waiting for a breakout this week. That said, we do have 18 bullish indicators this week. 1 is neutral, and we have 1 bearish as the FANG stocks pulled back. That leaves us short, intermediate, and long-term bullish, with the S&P 500 and spiders, 3,800 resistance, 380 on the SPY, even though we broke above that level on Friday. We're looking for a pin going into OPEX this Friday, with critical support at 375 on the SPY and 3750 on the S&P 500. One thing we know for sure, prices are determined by the attitude of market participants to emerging fundamentals. Fortunately for us, these attitudes move in trends, and once a trend gets underway, it tends to perpetuate. Provided it's not overstretched, we can reasonably assume that the trend will continue. It's that point that we'll discuss this week in several areas: the equity markets, the bond markets, and the commodity markets, which are showing us themes. With that in mind, we're looking at the spiders. I've drawn on some Fibonacci's to assist in some of the things that we're thinking about. We're breaking out above that 375 area, which used to be absolute gamma resistance. That's since moved up to 380, while towards the end of the day on Friday, we did see a test of the 382.50 zone. The Fibonacci's on this breakout above 375 gives us a short-term target of 391.32 plus or minus, being this area right in here was a little bit choppy going into last week. If the gamma call wall doesn't shift higher, we'd look for mean reversion to 3,800 or 380 on SPY this week into OPEX on Friday. Volume was significantly strong. We had a MACD cross, and stochastics is pointing higher to start this week of trading. The Nasdaq also performed very well last week despite the FANG stocks, with the Nasdaq 100 up nearly 100% to date from the March 23rd reversal low. And volume did increase. MACD's above its signal line and rising. All things considered, however, the small caps gaining over 122% since the March 23rd low. Volume did increase as well. MACD's above its signal line and rising, and RSI suggests strength is persistent. In addition, if we remove the weighting of the FANG stocks that did create something of a headwind last week, the market still managed to forge higher. This is the S&P Equal Weight Index, breaking out of a range-bound pattern, which we thought might pull back to the 50-day. Instead, we broke higher. The number of stocks trading above their 50-period moving average is not overheated and in the red zone as of yet. And we saw a spike in CCI exceeding anything that we've seen in recent memory. What I also find remarkable is the S&P 1500 Composite new highs minus new lows percentage indicator is still green and rising rapidly. The last time we saw a histogram break this high was back in January 2020, in addition to January 2018. We saw the indices continue higher for several weeks thereafter, back in 2018, before succumbing to being a little bit overstretched and pulling back for several weeks thereafter. We see the same thing in 2020, being hindered only by the COVID-19 outbreak in February. With this in mind, we're looking for a follow-through on this momentum in the short term, reminding ourselves that banks start this quarterly reporting the week of January 18th. The Dow Industrials cycle is turning higher as well. The XII ARCA Institutional Index cycle is turning higher. The S&P 500 cycle is also turning higher. In addition to the New York Stock Exchange, 2,700 stocks, a broad measure of market participation. Cycle is moving higher on above average volume, with the final example in the Wilshire 5000 Composite Index, an even broader measure of market participation, breaking higher last week, up nearly 85% since the March 23rd low on extremely high volume last week, while its cycle continues higher as well. As traders, we need to be careful thinking the market is telling us something in isolation. Many people are bearish at the present time because the market's ripped higher and seems somewhat parabolic. What I learned a long time ago, though, is you have to look at everything: the Forex market, foreign exchange, commodities, the bond market, equities, and alternative assets, while taking data points as a directional indicator and using them to track where money is flowing. In this example, we can see the S&P 500 versus UST 10-year bond breaking out relative to the 12-month moving average and referencing previous occasions where price action did something similar. 2009, we broke out into this secular bull market, with cyclical bull markets in 2012, 2016, showing a persistent trend in this ratio, indicating 2021 could be a banner year for the equity market. We can also see that this longer-term oscillator is just now turning, like it had previously, 2009, 2016, and shows potential for continuation while not being overly extended. We can also see the CRB index is not overextended, starting to break higher, while the oscillator in the bottom panel is showing the trend is just getting started, which signals, as far as financial markets are concerned, that the business cycle has begun its inflationary phase. This means commodities have stopped retreating and have begun to firm. A bit later, bond yields stabilize in these cases and strengthen up in anticipation of forthcoming inflationary pressures. As a result, upside reversals in the commodity bond ratio usually indicate better things to come for the equity market and signal higher commodity prices. This can also be seen in copper. Its chart continues this bullish trend, while crude oil also continues this 25-week range breakout. This is week 7. We had above average volume last week as well. This is a bullish correlation to the equity market. As crude oil moves higher, it's bullish for equities to a certain point. Obviously, we're looking for a follow-through, potentially back up to the 76 per barrel mark if this trend perpetuates. Note the sector heat map, read from left to right, updated every Friday, is improving. Most sectors look very strong, with financials, healthcare, and materials doing very well, improving the most. In addition to what we saw with semiconductors, we're also looking at the international indices improving as the US dollar continues its descending pattern, trading below $90, with the XLY XLP ratio indicating institutions are bullish, nothing like we saw back in February, with most sectors above their 21 and 50-day moving averages. We're looking for follow-through, perhaps a breakout on XLC, communications, technology looking strong, industrials, and financials, with consumer discretionary leading, as we just spoke about, with the ratio between staples and consumer discretionary, with banks mostly bullish going into earnings season. Many stocks are looking strong, with Applied Materials, AMD, AVGO, Broadcom. Chip stocks looking very strong going into the week. We also see Chegg CHGG with a nice bullish breakout of its descending channel pattern. That looks like a nice long as well. Etsy improving, looking like it's going to continue higher, pushing off of the 21-day moving average, looking for a follow through this week as stochastics is oversold. The MACD is about to turn. ATR is improving, looking for Etsy to move back up towards the highs. Fortinet back on the IBD 50, looking for a follow through this week as well. Continuation off of the 21-day. Look for a move above 150 to test 153. RSI suggests a follow through. Volume increasing, showing institutions are picking up shares, and stochastics is turning. IIPR also looks very good, right at the 21-day moving average, holding, looking for a follow through. This channel down, looking for a breakout above 180 this week, and then a follow through, 187, and maybe a test of the recent highs. RSI is turning back up, confirmation. Stochastics is starting to turn. Monster Beverage is trying to break out. We've got Nvidia looking like it could get moving as well. Once it gets back above the moving averages, the true test is this 546 zone, though RSI is flat. Watching this one, if the semiconductors start moving, we'd look for Nvidia to follow through as well. We're seeing the trend in advanced security threat detection pushing a lot of these stocks higher, like Palo Alto Networks. CrowdStrike looking for a breakout to new highs, volume picking up. While SailPoint Technologies, advanced threat protection, this one looks the best in my opinion, looking for a follow through. Volume increasing, MACD's turning, stochastics turning as well. ATR increasing, looking for SailPoint to break out. PayPal is also very strong. Coming off the 21-day moving average, RSI is rising, volume increasing, MACD turning, stochastics is moving higher. ServiceNow moving back above the 50-day moving average, looking for a follow through. If it can get back above the 9 and 21-day, this reversal could net you a nice profit. About 40 points back to the highs. We can see RSI reversing, volume increasing, stochastics and MACD turning. Looking for more. Tempur-Pedic, TPX, riding the trend. People leaving the big cities, moving to the suburbs, buying new houses, new furniture, new bedding. Trade desk with a nice reversal. We're looking for this to continue. Get back above the 50-day, 9 and 21-day. This could be a nice mean reversion trade, back to the highs if it can maintain this strength. Stochastics turning, ATR elevated, MACD histogram is turning, volume increasing. Tractor Supply also reversing nicely off the 50-day. We were mentioning that one last week as well. Viva Systems reversing, VRTX looks very strong, moving above the 9 and 21 day, bouncing off the 50-day, spending more time above the 9 and 21 day now. Trend looks like it's going to continue. RSI is rising. You just see more volume. Stochastics is rising. MACD's turning. VIP Shops Holdings breaking out again. Following through. This has been on the watch list since it moved back above the 9 and 21 day and 50-day moving averages. Following through, breaking out. RSI is showing muscle. We have increasing volume, MACD above its signal line, and stochastics embedded. All of these stocks showing a relative strength line climbing, giving us an indication that we could see follow-through. Look for follow-through in CDNA, Cliffs Natural Resources, Fuel Cell Technology. All of these looking very strong into this next week of trading. Target breaking out last week. Continue to move your stops up underneath. Tighten them up. A lot of the stocks from the IBD Big Cap 20 also looking very strong. Following through, IDXX, a nice little setup, continuation and follow through. Peloton looking for a breakout. RSI rising, retest the highs. Looks like a nice bounce off the 21 day. Need to see more volume, but stochastics and MACD are turning. In addition, many of these stocks from the Dow Industrials looks good. Apple, American Express, Caterpillar, Cisco, CVX, DuPont, Home Depot, IBM, Coca-Cola, Microsoft, Nike, Raytheon, Travelers Insurance, Visa, Walmart, and ExxonMobil. All of these looking very strong going into the week. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com with your weekend video newsletter for January the 10th, 2021. I'll send out a watch list later tonight around 11:30 on the East Coast, 8:30 on the West Coast. So be sure to check your inbox for that. Otherwise, have a great weekend. We'll talk to you soon. I hope this helps. Take care.